alignment of interests, if you like, through collaboration, is what seemed to me to emerge as a potential prize from the evening.
There is a huge opportunity here for different parts of the financial industry, the casualty insurance and the long-term insurers and the pension funds industries, to work together to create the sort of assets that the constructing and contracting industry is in a position to provide, but at the moment finds it very difficult to finance. And we have to ask ourselves how we can bring forward the engagement of the institutional investors with the contractors, with the construction industry, right from day one, so that when decisions be made, the people who actually end up owning that building for the majority of its working life will have a significant input. Can the insurance industry change its product mix to look at projects as a whole, rather than, as it does currently, look at the insurance risk of each and every individual contractor?
In reality, the insurance premium is such a small amount of the overall project cost that a discount, even if it was a 20% discount, would have very little effect on the behaviour of the construction project. What we need to be doing is working together to help reduce the overall project cost by other risk mitigation factors.
When we look at predictability, the simple ability to deliver a project on cost and time, the sector is still below 50% on that measure. That's the type of risk which I think is fundamental to the industry addressing. Digital construction and the use of BIM.
Where we can actually build a building in virtual reality. So you don't now take something to site and see whether it fits or not. You know whether it'll fit because it's all been done in virtual reality.
The upfront planning that process drives means at a much earlier stage we can understand where the risks are, whether the project is deliverable, and many more parties who need to be contributing to the creation of that model, which is naturally integrating the supply chain and again driving down risk.
Although we have a huge database in the insurance industry about a number of things that may or may not happen in the construction industry and the risks run, there probably isn't as much communication between the two industries as precisely what those risks are.
Organisations are coming to understand that competitive advantage doesn't come from hanging on to your own data, but sharing it and pooling it, and then competing on the ability to analyse and get value from that bigger data set.
It reflects the risk in a way that we couldn't in the past. There it is, all online in 3D.
It's also a matter of the information we can gather from buildings in terms of sensors and energy information and so on. Part of that is actually physically how you gather the data. Part of it is the software enabling you to interpret that data and to do so on an interoperable basis.
There were two key messages for me. One was collaboration and the other one was early engagement with underwriters.
Casualty insurance companies that are very often presented with a fait accompli rather than being part of the process. The other issue which came across is the plea by the insurance companies that they would much prefer to be involved directly at an early stage. And that will not disadvantage the insurance brokers who are sufficiently expert to enable them to provide value, but it may cause a certain degree of concern for those who feel that they will be disintermediated from the value chain.
And we hope to involve a wider audience and wider participation from other professionals in the construction industry.